5 bangs in the US economy. Bang number 2, the real estate plunge: why home prices could drop 40% and what to sell before the collapse. The story: the US housing market, once soaring to new heights, is now on the brink of a major downturn. Home prices have risen dramatically, nearly 45% between 2020 and 2022, largely driven by low interest rates, pandemic-related demand, and supply shortages. However, the affordability gap has widened, with median household income growing only 3 to 5% per year during the same period, leaving many Americans priced out of the market. As the US government borrows $1 trillion every 100 days, the debt burden is pushing interest rates higher. By October 2023, Wall Street hit a breaking point, signaling it could no longer buy all the bonds being issued by the government. This led to a spike in interest rates, making mortgages more expensive and slowing down housing demand. Economists are warning that real estate prices could plummet by up to 40% in the next few years as fewer people can afford to buy homes. What to sell immediately? To safeguard your investments before the real estate market crashes, focus on selling these vulnerable assets. Overleveraged real estate investment trusts, or REITs. With interest rates climbing, REITs that rely heavily on borrowed funds could face major challenges. Expect significant price declines, potentially 20 to 30%, in these investments as their profit margins shrink due to higher borrowing costs. Luxury and high-end properties. These properties often experience the sharpest declines during market corrections. High-end homes could lose 30 to 40% of their value in the coming crash as demand falls and wealthy buyers pull back. Speculative real estate developments. Unfinished or newly launched developments face significant risks. If demand dries up, prices in speculative real estate projects could drop by 20 to 35%, especially in areas where housing supply was overbuilt in anticipation of continued demand. Second homes and investment properties. When financial uncertainty hits, second homes and investment properties are among the first to be sold. These markets could experience a decline of 25 to 40%, as owners scramble to offload these assets amid rising interest rates and falling demand. Commercial real estate. With the rise of remote work and changing retail patterns, commercial real estate is already under pressure. Experts are predicting up to 30% declines in property values, especially in office spaces and shopping centers, with the potential to worsen if interest rates continue to rise. Action steps. As housing affordability declines and interest rates rise, consider divesting from real estate investments that are heavily reliant on debt or speculative growth. By shifting towards safer investments like money market funds or government bonds, you can protect your portfolio from the anticipated 40% drop in real estate prices. The real estate bubble, inflated by cheap debt and speculative buying, is beginning to deflate. Taking action now can help you avoid severe losses as rising interest rates push housing prices down. Follow me for the rest of Bangs.